Investors and traders, welcome to the channel Market Chart Pattern. Today is 29th of September 2024. I hope everyone is having a great weekend and looking forward to starting a new trading week. And it will also be a new month as well. So we'll be approaching October. This year has really gone fast. So there we go. Approaching the fourth quarter, the busiest season of the year. As always, this video is for educational purposes only and it is not a financial advice. So we are taking a look at our timing model. This has done a fantastic job, and at times the key dates, it has picked up turns in the market with a really uncanny ability. And what we have now going on is I've got two dates coming up. These are minor dates, 7th of October and 11th or 14th of October. Just make a note of it. The big one is actually around the 7th of November. And I'm working on some longer term cycles, which will be based on the weekly charts actually. So we could have some additional dates as well. But for now, 7th and 14th of October, these are the minor dates which are coming up per this timing model. So let's take a look at, shall we take a look at the bonds first or shall we take a look at the stocks first? All right, let's start with the bonds actually. So we'll start by taking a look at the shorter end of the curve and see what the yields did. So this is the daily chart, and we can see that it's just in a trading range here. After reaching and exceeding our targets, just to show here, this is going back all the way to 24th of March, and it's just stuck in here in a trading range. But last Friday the yields did fall back a little bit. Now let's also take a look at the calendar for next week. So we move on to the next week. The times, because I'm based in the United Kingdom, these are British summer time. So for Eastern times, you'll have to actually make the adjustments. But let's take a quick look what's happening Monday. So we have in the afternoon, New York time, we have Fed Chair Powell who's speaking, but otherwise I don't see much activity for the US market. There we go. So this is really important. We'll have next Tuesday the ISM manufacturing PMI figures and the jobs opening, jobs opening. Both of them are actually red, so they are market movers, events. And then we have the Wednesday ADP non-farm employment change coming. So these are this is a really a key one to watch. And then we have the unemployment claim. So this is the big one Thursday, and of course we'll also have the ISM services PMI. Anything related to jobs, and to a slightly lesser degree now anything related to inflation, in particular the CPI, and then PMI as well. They are major market movers at the moment. But here's the big one. This is on Friday we'll have the non-farm payroll report come out. This is the big one with the unemployment rate. So really key week coming up in respect to the economic data coming out, and it's gonna most likely set up a tone for the next for the month, and what the markets really key week to watch, especially the Friday coming up. So now here last Friday we just saw a little bit of a pullback in the yields. I believe it might have something to do with some economic data which came out, but nonetheless what it's doing is I think next week it's gonna just chop around here till we get to Thursday and Friday. So the ADP non-farm report and the non-farm payrolls with the unemployment data coming out, that's when we are going to see a big move in the yields, and we'll watch and see. The chances are we might see a little bit of a move to the upside. It will all depend upon what sort of unemployment data we get. But if we are able to break below this level here on the one coming from 24th of March 2023, that's pretty big, because what it means is that market is telling us that Fed is likely to be more aggressive in their rate cut cycle. So in their next meeting, we could be actually looking at another 50 basis points. So they would have in two meetings cut one percentage point, 100 basis points. So that's going to be pretty big. Now let's take a look at the 10 years. So we'll take a look at the TNX, slight decline in the yields, as well as yielding around 3.74%. Pretty close to what the 2 year is doing, actually. And let's now take a look at the futures chart. We are actually following these markets on the futures chart, and here we go. So when the Fed came out with their decision on the 17th of on the 18th of September with regards to the 50 basis point cut in the interest rates, the interest rate markets, the bond market, the long bond futures market, the 10-year note market, they actually sold off. So actually the yields went higher. Now that's a pretty interesting to see why the market actually perceived a rate cut like this, and one of the reasons is it was already baked in the price. So a lot of it was actually baked into the price, but also 50 basis point was kind of a bigger rate cut than would normally would happen for a start of a rate cut cycle, which a lot of central banks in Europe actually started with 25 basis points. The Bank of England did with 25 basis point. The European Central Bank did it with 25, but the Fed started with a 50 basis point, and that was kind of in sort of way admitting that they should have done a 25 basis cut cycle start in their meeting in July, which they didn't do that. Okay, they got more data, but they had to cover up for it. So now what we are looking at is look at this really nice trend line right here. It is right at the 61.8% retracement. So as long as this support is held around the 123 and 26 seconds, we are actually looking at the prices moving higher. In other words, the yields moving lower. And we on the T-bond futures, we have this big pattern completing around 131. So the chances are it's likely to get there, and above that we have the 38.2% retracement coming around the 134. So in my opinion, it does appear this is where the market is most likely going. We are in this ABCD CD leg higher, so lower interest rates should come on the longer end of the curve. And on the weekly chart, it's a similar kind of picture. Here we go. And you can see that the weekly candle is it was fairly down, but then it just closed slightly negative as well. But a lot of last Friday was the yields went lower. And then if we take a look at the TLT, here we go. It's showing a similar pattern to the long bond futures. So I think it's likely to move to 104.40. And I forgot to take a look at the 10-year. 10-year is interesting because it completed this ABCD, and the yields are actually lower on the 10-year in comparison. Now I think it wants to go right to the 116.30 with the possibility that this is where the 38.2% retracement is around 118 and 22 seconds, where this market might want to go actually. So this is what we are looking at across the curve, the different tenors. And what we are looking at is that actually the yields are moving lower, which should be good for stocks in some ways. Now let's take a look at what the dollar did. So let's take a look at the this is the weekly chart of the US dollar, and you can see that ever since topping around 107, which we believe is a really important top, this has been just moving lower. It went into a sideways trading range for quite some time, and when it was in this leg higher, there was a chance that if it broke above 106 or roughly 107, it could go to 108. That did not happen. So I'm still leaving it right here, but the chances are that it actually met our target of this getting into this gray zone. Now really important is to watch this 98 level. If it breaks below that, then we are looking at this let me actually draw it here. because now it's the possibility of this happening has increased quite a lot. So actually, let me try to demonstrate what we could be looking at if that were to happen. We could be looking at the dollar easily index moving to 91.50, and actually goes and tests these lows around the 90 mark, 90 to 88 mark. This is where the dollar could actually move down to, but it could actually do it in a pretty accelerated way. So let me actually leave it right here with a question mark, because we need further price action to actually prove that the key support which is being held has been broken, so that we could actually look at this pattern unfold another ABCD to the downside. Now on the flip side, because there is support right here from structure, also this really key one, or the 61.8% retracement, whether it could actually rally, and if it does rally, I think it could rally to about 102.25. There was a chance it could rally to 103.50, but with this kind of for 1 month just been moving lower, the chances are less and less that it might be able to do that unless something really changes, and the price action will tell us that there is something which is in the making. Now on the daily chart, here we go. We can see that it's just trading range behavior, but ultimately moving below this. And what is happening is, actually, if I were to draw a line like this, so if we actually break below these lows, so this break out of this range, and then this 99.20, that becomes the target right here, and that's going to be the really key level that we are watching, 99 in general. And the market could make a stab at it, and then we'll have to see whether it's able to break it on closing basis. This is something which we like to watch, but ultimately I think if we were to break the 99, 98 level, it looks like the Treasury and the Federal Reserve, they have decided to actually let the dollar go. What we have seen over the course of last 18 months to 2 years is, in fact, dollar being pretty stable, and actually at one point pretty strong as well. And this has really helped with the inflation, because it really exported the inflation out of United States to the rest of the world. So now with the inflation outlook changing, and Federal Reserve embarking on their policy of interest rate cuts to stimulate the economy, I don't think the dollar at this level, maybe it will just go lower. And really longer term, time to time, I like to show this chart. There we go. I am of the opinion that actually the US dollar has topped longer term, and it actually topped back in the 1st of September 2022. And we have these several patterns completing, but one of the most compelling one is actually this symmetry in the market. This is going back to the early 90s, and the top came in around the 2000s, and it took about 10 years to make. And then if we just copy all of this and we just project it from this low, we get to the same top which came in September of 2022, and it took about 12 years. So the symmetry, and this is like a really long-term charts, right? We are going back several decades of price action data. The symmetry in it from a price and also from the time perspective is pretty remarkable. Now it doesn't mean that if this 99 is not convincingly broken, it could make a stab really higher as well, because if you look at what happened back in the 90s, towards the early 2000s, it did make a stab towards a new all-time high, but this is where it failed. So something like this could also happen here, but the chances of it will become less and less if it breaks below this low, taking out this candle low of 3rd of July 2023, kind of like what happened here, and then we could see quite an accelerated move to the downside in the US dollar. So there we go for the US dollar. Now something really interesting is happening in the gold market, so we'll move on to gold. Here we go. we are talking about the dollar declining, and that should be actually positive for commodities in general, precious metals, and base metals like copper, silver, etc. But on the other hand, gold has actually done something remarkable last week, and I think I'm gonna do a special report just on gold, and we'll also take a look at the gold equities as well and the ETFs for gold. Just focus on gold, the markets, and a little bit about silver. Here, it has completed that big ABCD pattern that we had been watching for months and in fact years. I believe I did a video about it in maybe 2022 sometime, really looking at really long-term patterns, and at that time we had a 2700 as a target, and it took few years, but we got there. And this is one of these things about these patterns, the price projections. They are really powerful tool if you are able to use them the way they are meant to be used. I am working on preparing some educational material, and I will be showing more examples of this on different time frames. So it's not that these are really longer time frames that we get to see them. We also see them on shorter time frames, and I'll actually show you an example on gold, which happened last Friday on a 15-minute chart because I was watching it. So here, really interesting. And one thing is this: the month is not over yet. The September month is not over yet. We've got one more trading day to go. But look, it's just really strong market moving into it, but it's also completing multiple ABCDs, especially this big one going back all the way to 2000 when the bull market actually started. So what it could mean that we could actually pull back. We could actually pull back a few $100s per ounce, per troy ounce, and this is the BC swing that has been in this longer CD leg higher in the one in the purple. So at max, we could really pull down to about 2,250, 2,240 mark right here, and that's gonna be a pretty big move actually. And if we were to just draw a retracement like this, yeah, it's also close to about 38.2% retracement, and it's just going to be a fairly normal corrective move if that were to happen. On the flip side, because the market is really strong, getting above this, it would mean that CD leg is actually extending, and then 3000 is the kind of psychological level, and it's only $300 away. The gold could easily get there. So very key to watch what is happening in the gold market. Now moving back to the shorter term, let's take a look at this on the daily chart. Now we are looking at the gold market, but this is COMEX gold. This is the futures chart, right? It's not spot. If you are working with the data coming from the spot market, your price levels are going to be a little bit different. The price patterns are going to be almost the same. Do write me in the comments if you also want me to take a look at the spot market. At times, actually, it is valuable to take a look at the spot market because of the gaps that come in the rollover of the futures actually. So here last Friday actually we closed lower a little bit. And that's really interesting because of what was happening in a geopolitical situation somewhere in the Middle East. That one would have expected the gold to be a lot higher, but actually in fact it closed lower on the day. Now the only thing I can say from a technical perspective is that it met our really long-term projection, and I don't know, it was profit taking or whatever it was, but it closed lower on the day. And if we were to move down to really shorter term chart, 15 minutes, here you go. I want to show you that this is around the noon time, London time, that when the market actually put in that figure of around 20, what was the high, 2708. And then it dropped 2708. It went all the way down to 2677. So that's a pretty big drop. It's about like roughly $30 drop in gold, and it really happened in a couple of hours time as well. But the interesting thing that I wanted to show you was this. Look, after dropping right here, then it rallied. And then there was a rally like this, which had a small ABCD here. So let me show it to you. It was an A, B, C, D like this. Boom, there we go, right to the point right here. But there was something else also happening around here. And let me draw the retracement here. Boom. It was also the 61.8% retracement, which was just above this, so with the pattern formation and with the 61.8% retracement, we were actually looking for, perhaps you could call it a sell signal. And on a 15-minute chart, candle closing like this, once it gets below this, it's low. Pretty good. You can define your risk pretty neatly. And there it went. And if we were to actually take a retracement from this level, I believe it was 78.6%. Let me actually get above here. There you go, even more precise. So you had like the projection ABCD. You had the 78.6% retracement from here, nearby 61.8%. How close it was? In about a buck, not too far for gold. So you had a confluence of so many things coming together, telling you, watch for a possible reversal around here for resistance. And this is what we saw. And then what the market did is, let me actually do it. I think it did another ABCD. Here we go. Boom. Right to the bottom tick. And once it did that, it completed its ABCD, this bigger one. It rallied about 20 bucks. And where did it rally to? It rallied right into the 38.2% retracement of this swing. And we also have the 50% of this swing nearby. And then market pretty much closed over there. So just to show you guys, illustrate that these pattern formations, they work in all time frames. And in fact, you can go down to maybe even a 1 minute chart and replicate this, but it's going to be quite a fast movement to be able to actually visibly see that. But for trained eyes, you'll be able to spot that, but in real time it will be happening really quickly. So as human beings, being on 1 minute chart is not going to be that easy to spot these things in real time, but these patterns just happen on all time frames actually. So that's the, in my opinion, pretty beautiful part of it. Now let's take a look at the silver market. This is COMEX silver. It also closed lower, and this is something which we talked about because it has completed this big ABCD that we were watching in the red, so basically upper part of the trading range. It could take some while to actually get above this strong resistance, and if that were to happen, we have some upward targets as well, which is 33.80 followed by 35.30 as well. So we'll have to wait and see whether this market is able to do that, or whether, just like gold, some pressure could actually come in this market and it actually retraces back into this trading range. Now let's go back and take a look at the equity markets as well. So I think I'm just going to focus mainly on the S&P 500 and NASDAQ. Because the video is getting quite long, and I don't think I'll have the time to actually get into the sector. So probably another video, either Monday or Tuesday for that. So here, it just keeps on chugging higher, and on the daily chart, it formed an inside bar last Friday. Chances are it could still get to around 58.04, but we'll have to watch the the opening today really carefully, how the market is going to open in futures, whether it's going to be with a gap up or gap down, and how big that gap is. And there we go. So we have higher targets as well. I think there's a pretty good chance we could actually get to 6100, 6110, which is the CD leg in the S&P 500 cash index. One of the things I just wanted to mention was that it's a particular cycle that I was looking at, and that was throughout the summer till the end of September. We had a pretty bullish bias for the stock market, and one of the reasons was because we are in an election year, and that's a typical kind of a cycle that actually plays out if the stock market has been strong going into the month of April, and especially towards the end of the April. So it was fulfilling. This market was fulfilling those conditions, and that actually led to having a stronger summer, with the exception of what we saw happen really quickly towards the end of July, and finding a bottom on the 5th of August. Now we are at the end of September. I think the playbook is going to change a little bit. In my opinion, we're going to see quite a lot of volatility. Maybe we might see more trading range behavior to actually sell pressure come into the market. But then it looks like, after the elections, maybe there's going to be a pretty strong rally around that time or after that time. And we could actually, in 2024, achieve these targets that we are watching for. We'll have to wait and see. Of course, the price action actually determines everything. We are in that window. And now between in October and towards when the elections actually take place, where we're going to see a lot of volatility, and the price action will actually tell us whether we are actually what kind of price action we are seeing in the market. And now let's take a look at the S&P 500 futures. This is the S&P 500 E-mini futures. On the futures chart, we could see there is a target right around 6101. And then 6172 is possible as well in that ballpark figure. Interesting thing is that it cleared all of this resistance, which was in this box around here, and now last week it gave up some gains towards the latter part of the week, but still closing above these key levels, so which actually suggests that I think we are most likely to go sideways to upwards, chugging along, moving towards the upside. So this is what we are watching in the S&P 500 E-mini futures. But I think, as I mentioned before, we are getting into that zone where we are heading more into the volatility. Now let's take a look at the cash market of NASDAQ 100. So this is the weekly charts right in here. What I wanted to show was actually this is the daily chart. We were watching for this market to get into this box around here, and has exactly done that. Now there is a chance we could be in an ABCD higher, which could actually challenge these all-time highs here as well. Now if we just move back to the futures chart. So this is the NASDAQ 100 futures, and this is what I was talking about, this possibility of ABCD. So here went right into this box here, where is a good amount of resistance coming right from the 1.27 to expansion of this swing, and we have seen the market actually pull back from here last Thursday, and last Friday actually close in the negative. And also, let me see if it actually took out the, yes, it also took out the lows of Thursday. So that's that tells us there is some, at least in this market, there is some it has a possibility to actually have a follow through to the downside. We'll have to wait and see what the price action will actually tell us here. Now the NASDAQ is a little bit different compared to S&P 500 and also Dow Jones as well, and the reason is that it has completed this big ABCD in the one mentioned in green, going back all the way to the March of 2020, so the COVID lows. So here the chances are that we just experience a trading range. Maybe we make a slightly higher high or get close to it because of the ABCD pattern. So there's a pretty good chance that this market might have actually put in some sort of a top here, and then we are just most likely in a trading range behavior here. S&P 500 has yet to complete its ABCD, both in the futures market and the cash. Quick look at the Dow Jones weekly. You can see that now the interesting part is the Dow Jones on the futures actually hit 43,000. Isn't that interesting? That's really interesting. 43,000 in Dow Jones. Wow. Now the bigger ABCD actually comes way higher here, and if the S&P 500 goes towards 6100 target, maybe it's able to at least get into this gray box as well. We will be watching the price action really carefully, especially this trend line here. If the selling pressure comes into the market and if it breaks below this trend line, then I think we are moving back into this trading range, and it could actually hit these this low, maybe it comes back and challenge these lows coming in from the 15th of April. Now the key thing is that the low of 5th of April, 5th of August, that's going to be a really interesting one. So on a break of the this trend line, I think this was the first one which will of course get challenged, and moving below this we'll have to watch the price action really carefully to see whether we might have seen some sort of top coming into the market as well. Now let's take a look at the Russell 2000. What it's doing, it is actually going sideways and not doing much. But you can see on the weekly chart, it didn't do much last week. It wasn't that weak either. It wasn't that great either as well. Now one of the things is that there's a possibility that we could see at least a new high being made here. So it could actually go and try to make an attempt towards these all-time highs, especially if the S&P 500 goes to complete its 6100 target, then probably it might actually be able to do that. So we'll see some participation come in from small caps, but their price action, it doesn't look that strong as of yet. But we are in an environment where the interest rates are moving lower, and if the Fed actually delivers and is able to guide the economy in a way where the whole buzz around the whole narrative of soft lending becomes a buzzword one more time, we could see actually perhaps this small caps also make a at least a slightly higher high to new all-time highs. So this is what we are watching in the key US markets. Next week I'll do another video. We'll focus more on the sectors and how the market is actually moving through or going through the rotation. It will be an interesting one to watch. So thank you very much for watching the video. If you found this video of educational value, give it a thumbs up. If you like our technical analysis and how we look at these markets here, then please do subscribe to the channel. And if you do, then hit that bell icon button. That way you will know when the new videos are posted. So have a great weekend wherever you are, and stay safe, and I will we'll be talking with each other again in the next video. Good luck and good trading.